In this video, we're going to talk about Lucid Motors. If you're considering buying Lucid Motors share in your portfolio, then please keep watching this video until the end because it covers many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $23.44 and closed at $23.55. The lowest point at which it fell to was $23.33, and the highest point it rose to was $24.35. Compared to the current price action, its 52-week low was $9.60, and a 52-week high was $64.86. The current trading volume of Lucid Motors is 6.8 million shares, compared to the average volume of 15.5 million shares. The trade volume of CCIV shows that the market is still relatively reluctant at buying the shares. The stock is less than half compared to the normal trading volume, and it shows that the stock is on the road of a fragile recovery. I believe that the current trading volume shows that the stock is completing the self-fulfilling prophecy of low volume leading to lower price. The stock may be taking a break from moving upward, and that suggests that the time frame of the stock's recovery will be longer than anticipated. That leaves us some time for decent entry points. Let's take a look at the difference between the company's market cap and enterprise value. Basically, the market cap is the sum of the price of all the shares that are publicly traded, and the enterprise value is the value of the company's assets once the debts are paid off. We can see that the market cap of the company is $6.2 billion, and the enterprise value is $5.8 billion. The difference between the market cap and enterprise value is mostly caused by the speculation of investors who are willing to bet on the company's future. In the case of Lucid Motors, the result of the speculation is approximately 400 million shares, which is a relatively low amount of premiums between what the company's assets are worth and what the stock market is willing to pay in order to own a piece of it. Now, let's talk about the number of shares the company currently has and the shareholder composition as of the latest data available. The total number of shares outstanding is 258.8 million shares. Amongst the total float, insiders hold 0% of them. We should also look at the percentage of shares owned by institutional investors. In that case, the institutional shares hold 11.8% of the total amount outstanding. There are 40.3 million shares that have been shorted, which represent 25.97% of the shares traded. From what we can see in the shareholders' composition, I believe that the reason why insiders hold 0% of it is because the stock is still a SPAC, and future disclosures will show how much insiders actually own of the Lucid Motor equity. The short-term price action pattern of Lucid shows that the company is trying to gain some of the losses back from $17.94 in mid-May 2021, and it reached the price of $23.55 as we speak. This shows that the stock is probably over the bottom of the sell-off, and it is a matter of time before it goes higher. My overall conclusion about Lucid Motors as a stock is that the company may take time to recover from where the stock was, but the time frame may be longer than many of us initially believed. With that being said, I believe that one thing that we can say for sure is that the stock is going to get higher, because the bottom of $17.94 was probably as low as it could have gotten in the recent period. My recommendation is to start buying Lucid in small quantities to prepare for an upcoming bullish run in the next few months. The last element to consider would be the overall market sentiment in the financial market. The current reality is that investors and money managers are not willing to blindly follow companies and throw in their money anymore, like much of 2020. There are many reasons why investors are now shying away from the innovative and disruptive stocks. Some will say that they were overpriced, that they were overbought, or that they were relying on selling dreams instead of having solid financials. But the real answer is probably a much simpler one. At one point, some people began to lock in their profits. That created a significant crash in the company prices, not really because those companies are necessarily bad, even if some of them are, but that they just had more sellers than buyers. That triggered a torrent of sell-offs from February of this year to nowadays. The overall tendency at the moment is that those stocks are now bottoming out, but investors are generally speaking more skeptical, and only companies that have robust financials or ideas may survive. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.